we're going to be talking about price action. This is the godfather of trading, and we're going to be breaking down why a hidden secret and methodology that was used in the 1800s has stopped, and how we're going to bring it back to improve your trading and make sure that you are creating incredible level of accuracy around your support and resistance levels. Let's go straight into it. Stay till the end because I'm going to be giving you a trading view indicator that will be able to do all this automatically for you. What if I told you that one of the most important things that you can have on your chart when you're looking to analyze price, and it doesn't have wicks and it doesn't have bodies, and it's literally just a line? Today, we're going to be looking and breaking down why a line chart has gone distinct with a lot of traders and why do professionals still use it to determine what are the best levels. We're going to look at the history of the line chart. When was it developed? What was the reasoning for it? And why you can use it today to have the most accurate support and resistance zones to improve your bias and ultimately your execution. Now, you have heard from everyone that price is God when it comes to trading. And that is absolutely true. This is one of our get real moments today. Why does the line chart represent best what is happening in price? So we have to go back to 1880s, and there was a guy called Charles Dow. You might know the name because you're probably trading it right now. Your Dow index is taken his name. This guy is probably one of the most early technicians in trading, and he decided that the best way to look and represent the market would be a close of a line chart. So we're talking before any indicators or algorithm, anything in the chart. When we go to the foundation of it, the first analysis was looking at the averages prices of the daily, monthly, and weekly closes. You may have also heard of the Dow theory. The whole theory is built on a line chart. So we're talking about one of the most important elements in technical analysis. And I know that 90% of the people here are not currently using it. Today, you're going to find out why it's important. Now, in 1991, something happened to interrupt the use of the line chart. And that is no other than Steve Ninson's book. And it was on Japanese candlesticks. And he showed how these candlesticks can be applied to the Western markets. Candles obviously became the mainstream, took over, and now every day we know we're looking at wicks, we're looking at bodies, we're looking at the highs, lows, and so much information. This is unbelievable that we can have in one single candlestick. But what have we been missing by overcomplicating things? And here's a fact. Institutional levels and professional levels still use single line charts. You might think because they're old, or do they know something that you don't know? Let's think about it. Why did Dow obsess with the close of the market? The close of the market determines what was the decision of the market around a fair price for the asset you're trading. So when you go into your next day, you know where the market started and where the battle happened about what is a good price. The verdict was the close of the market. That's when you come on the next day and say, okay, this is where the fair price was yesterday. Let's find out where it's going to be today. Now, the magic happens because within a line chart, every single day can become a dot. Every single week becomes a dot. And every single month becomes a dot. As you can see in the chart, multiple lines eventually close, and those close, if you put a line through them, it will give you the actual movement of the asset. And you can see in this case that the market is trending upwards because it's creating higher highs and higher lows. Now, if we look at the same with the candlesticks, you might see a lot of dojis and a lot of pin bars and a lot of bulls. As you can see within the line chart, you have a clear indication of where the highs were, where the lows were, and what the market tried to do. It decreases all the noise, all the colors into one line chart. Nowadays, we have this amazing tools that have all the indicators. There's so many things that we can put on our chart. But is that improving our trading and our understanding of what is happening at price action level? Our big get real moment so far is that you do not need a clear indicator. You need a cleaner chart in order to understand from price action, what is the market doing before you even consider entering, executing, or having any trading ideas. The amazing part of a line chart is that you are able to determine the trend very, very easily. As you can see here, the higher highs developed and higher lows developed. that will give us an indication that the market is trending upwards. The other thing that is amazing with the line chart, it gives you a very clear indication of where the market stalled, reversed, and where price closed in a specific price zone. There is no second guessing with candles and wicks. You know exactly where that dot is. And every time price reacted to that line, you can be confident that there is an accurate level there that you can use for your buyer and determine if the market is looking for a reversal or a continuation. And most importantly, because the line chart is based on the close price, you know you're not looking at an indicator, you're looking at real price action. The incredible thing about tracking the close is that you can do it on a higher time frame, medium time frame, and a lower time frame. So even if you're looking to enter at a 5-15 minute, the importance of how price reacted at the end of close of the week or the month can be represented on the line chart. As we can see here, we have a price bouncing off a weekly close, and we have the same price bouncing off a monthly close. That is a nice sign that we're looking for a reversal into the market without a lot of noise. As you can see, the line chart has an incredible, immense power that you can use on your daily charts. I was very lucky to be introduced to the line chart with the Scruffy Trader, who has also done a breakdown into the Fiverr. So go and watch that video. It gives you a live presentation on how you can use this method of charting to develop really, really good levels before you enter any trade. Remember, this is something that has been used from the 1800s and it's still used today successfully. When it comes to analyzing price, the line chart is king. And I know there's a lot of people out there saying, hey, I have everything I need in my candlesticks, and my candlesticks has the open, has the close, has the high, has the low. All that information is not in a line chart. You're absolutely correct. That's why in the next episode, we're going to be talking about the candlestick, how it provides the best chart when it comes to finding entries and fine-tuning like a sniper your execution for your trades. Now, we talked about the importance of the higher time frame and a line chart on a daily and the 4 hours. That is where you can identify your trend directions, the highs and lows and the lower lows. You can mark the close based on key levels where the market decided to close and go. You can read the bigger picture. You can also get a clear directional bias if you're going to be long or short for the day. The line chart is the best way to identify where the market is and why it is there, but the candlestick will tell you when is the right time to enter. That's why in the next episode, we're going to be looking at the execution and what does it look like to get your bias on the line chart, but then execute on your 1 hour and 15 minutes. As promised, I want to give you an incredible tool that I have been using, and it will automatically put the close levels of a line chart onto your trading view. So as soon as you join our Discord, you will be able to go to our tool sections and upload the trading view indicator so you can follow through what I'm going to walk you through now on trading view. Okay, so here we are on our beautiful looking chart of the pound dollar. As you can see, we're on a candlestick. But if you go on the top side here and you change it to a line chart, suddenly you'll be traveling back to the 1800s and how Charles Dow initially started to indicate trends, consolidations, and expansions of the market. You can very quickly identify that market is up, had a bit of retracement, another push up, bit of retracement, push up, consolidation, down, consolidation, down. Now, if we reverse that to the candlestick, yes, you can identify that, but the line chart will make it a lot cleaner to identify where the exact high is. Is the high here? Is it this range? Or how do you determine, is it the wick? Is it the top of the wick? Is it the body of the wick? Where with a line chart, it will give you a pin where you can utilize to take the close of the previous, in this case, day to decide where that price wanted to go. Now, on the Mondays, when I'm going to be doing the live trading rooms on the Discord in Trade.Set.Go, I will walk you through how I do my levels, but I also want to show you this indicator that I have been developing. It's currently under work, but it's starting to look really good. So I will be able to analyze my monthly levels. I can choose how many months I want. You can go back to a year, to 2 years. You can go for 6 months or whatever you want to see how many levels per time frame. So if you're on the monthly, how many lines would you like to see of importance? You don't want to clog the chart with too many lines just to keep it clean for trading. So if I press OK, so now we can see that it's going to populate only the monthly levels on the chart. And this is on the daily. As you can see on the daily, it looks like it hasn't found any areas where the market changed its mind. It looks like it's random space. But if we throw it onto the monthly, you will identify and see that it has gone and found the areas where the market reacted the most, and that is super clean. Now, if I want to add to the next level and go to my weekly, I still have the monthly levels on there. I can determine if the market is looking to behave downwards or upwards, or is it consolidating. I can go back into my settings and now want to add the weeklies. Now, as you can see, it's taking all the weeklies in there, and it's giving me a nice area where I can determine where potentially the market can go or react. And finally, the dailies. These are the big time frames. There are people that add quarterlies, and there are people that look at 4 hours and 1 hour. You don't want to clog your charts with too many lines. That's why I've given the option to choose. Do I want only my weeklies, or only my dailies, or only my monthlies? So as you can see, the chart becomes messy very quickly. But if you go down to the 1 minute and you change to your candlesticks, because we're going to talk about in the next video, when we look at execution, you will have a very nice, clean looking chart with where price might be going or reacting with very nice key levels. And if you look at the history, you can see that these levels get represented and retested. For instance, this is a monthly S, which is monthly support. It broke the support, then found the support, broke below it, became resistance, and then continued lower. Someone might argue where that price is going, potentially to the lows of 135. Why? Because on the monthly, if we jump on the monthly, you will see that that level is clearly showing this area here as a very crucial monthly support. And you'll be like, that is not a monthly support. Look at those candlesticks. That's why you need to change it to the line chart, and it will show you a clear area where the market has returned in the past. So I hope this session has been life-changing for you, as it was for me when I first heard it from the Scruffy, and when I first went back to the 1800s to see what Charles Dow did and why did he decide to use the line chart with the closed dots to do his own analysis, and why that has actually been extremely accurate even today. Now, in order to get the indicator, you will have to join our Discord. Make sure you subscribe and like to our YouTube channel, and I will direct you to the area where you can find this incredible indicator. Next time, we're going to be going into candlesticks. What are the definition of candlesticks? Why did the Japanese develop this form of charting? Where is it best utilized? How can we use it to improve our trading, our execution, and to become financial free? Until the next time, have a good one and see you soon.